Hello and welcome to KYC, a brand new NDTV Profit show. In this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of companies they invest in. KYC, or Know Your Company, is a show designed to give you, regular investors, powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And today, we're taking up Senco Gold. Now, Senco Gold has actually seen considerable gains over the past few years. In fact, it has moved from strength to strength. This specific jewelry retailer was incorporated back in 1994. And at the moment, it is a pan-India jewelry retailer. It sells gold, diamond jewelry, as well as other precious metals in terms of its inventory too. And in terms of its stores, total stores out there are about 166. It also has about 67 franchisees. And overall, it does seem like it's on its way to the expansion path. But you know, as we do in all the shows, we're going to talk about a handful of parameters here, which you could consider in terms of, bringing you about how the performance of the company has been and the kind of ratings that we here at NDTV Profit give on the various parameters. So we do consider the income statement, the balance sheet, return ratios and cash flows. And besides that, we're also considering, the shareholding pattern, among others, street credentials, in terms of how the company has done, street coverage, as well as valuations. And to help us out with these ratings, I have with me my colleague Mahima Vachrajani, who's also going to take us through, in fact, these very many parameters here. And we'll try and figure out the thumbs on these, thumbs up or thumbs down on these, and give you a final rating on the company. Mahima, thank you so much for joining in. Why don't you just take us through the kind of growth that the company has seen and in terms of operational profitability as well?
Absolutely, Agam. So in terms of the income statement check, it's a complete thumbs up for the company.
Yeah.
Now, in terms of revenue, the FY24 numbers stood at 5241 crores, and the 3-year CAGR of revenue growth has been 25%. In terms of EBITDA, the EBITDA stood at 377 crore, and 3-year CAGR for EBITDA has also been 26%. In terms of EBITDA margin, the EBITDA margin has remained range bound. It's been around 7.2% in FY24. But in terms of net profit, the net profit stood at 181 crore, and it's seen a 3-year CAGR growth of 43%. So in terms of all the 4 key parameters, Agam, it's a thumbs up for this particular company. They've seen double-digit growth across the 3 parameters, except for, of course, the margins. The margins have remained range bound.
Right. Well, range bound, but the fact that you see that growth, which means it's translated into the bottom line as well. But let's talk about the balance sheet then. Now, the net worth stands at a healthy nearly 1,370 odd crores. It does have a substantially higher debt. But we must remember that this company is in the growth phase, which means that when it comes to expansion, it has been investing a lot. So its gross debt stands at around 1,500 crores. But you must also remember that it also has cash flows, or rather not cash flows, pardon me, but cash reserves on its balance sheet as of FY24, which stands at around 552 odd crores. So on a net basis, its debt level, or its overall debt level, is lower. In general, of course, this also brings that net debt to equity ratio at as a number considerably lower than 1. So based on that, we will at the moment give it a thumbs up. But what about the return ratios, Mahima?
Right. I mean, return ratios for this particular company has been a bit disappointing, because in terms of return on equity, we've seen that in 2022, the return on equity stood at around 15.6%, but that has come down from 14.2% in 2023 to 12.5% in 2024. So I believe the stock is not catching up as to how the company has actually performed over the past 3 years. And in terms of the return on capital employed also, we've seen a downtick in 2022. The return on capital employed was approximately 19.4%, which came down to around 19%, so similar range of 2022. But in 2024, we've seen a downtick of around, it's come down to around 15.7% level. So it's a thumbs down when it comes to return ratios. I believe the stock will probably see gains going forward, but at present, the return on equity stands around 12.5%.
Right. And of course, we must also remember that, a good ROE and ROC number is around 20-25% and northwards of that. So it does seem like at the moment Senco Gold is not only falling short of that, but it's also coming off by quite a bit. But let's talk about cash flows. And well, on a cash flows from operation basis, we have seen a net outflow. But we must again also remember that the company is in its growth phase, which is why on a net cash flow basis as well, we're looking at a positive number, which hasn't been a very large one. But at least as far as FY24 is concerned, we've seen a little bit of an improvement in its cash flows as well, which is why we'll give it a neutral rating on this specific parameter coming in. But with that, I will also go on and talk about the shareholding pattern. Now, as far as the shareholding pattern is concerned, it's a well-held company. So firstly, the promoters hold well over a third of the company, 67.5% to be precise, and another near 20% is being held by institutions. So when it comes to long-term investors and holders of the long-term, it's a substantially good number. That actually leaves with just a little over 14% with your retail shareholders or the public shareholding. So, and because of the fact it's a well-held company, pardon me, the company also enjoys a little bit of scarcity premium coming through, and for that we will give it a thumbs up. But in terms of its price performance, Mahima, it's outperformed.
Yeah, absolutely. In terms of the 5-year share performance, it's gained around 186%.
Yeah.
1 year has seen around gains of 55%. So in terms of the stock uptick, it's not been too bad, which is why we've given a neutral rating for the particular counter. But in terms of the dividend payout ratio, there has, in FY24, there has been a dividend payout ratio of around 0.08% versus that of 0% in FY23.
Yeah.
So the company has now started paying out dividends. But we will not see a large amount of dividend being paid out, and that is because the company right now is investing in its own growth, and we're seeing that because the company is also adopting it's been expanding in terms of store expansion as well.
Right.
And we've also seen that it's the only listed player which is also foraying into the lab-grown diamond space.
Yes.
Via its stores called Senes. So all of these expansion plans that the company has going forward also in in the international markets as
Right.
well, I think the money is probably going there, which is why the dividend payout ratio is low. So
Sure.
in terms of the street cred performance, we've given it a neutral rating.
All right, well, there you have it. But that's notwithstanding the kind of staggering growth that the price performance has seen as far as the share is concerned. But what is the street making of this? Well, at the moment, the street is sanguine. So firstly, we have 6 analysts on the consensus who cover Senco Gold, and all 6 analysts have a positive rating on the company. And in fact, if you take the average of the price targets for all these analysts, that entails a 28% upside from current market levels. So that's a thumbs up as well. But there's another reason why there could potentially be why this upside seems significant is valuation. So how are valuations looking, Mahima?
Absolutely. I mean, if we compare it to its peers, Senco Gold's valuation look really attractive at present. Although they're not low, but as compared to peers, the valuations look attractive. Currently, it's valued at around 49 times in terms of price to earnings. And if 2025 estimates as per Bloomberg suggest that this will go down to 37 times. And this, with respect to the peers, Kalyan has seen a significant run-up, which is why the valuations of Kalyan stand at around 128 times. And going forward also in 2025, the Bloomberg estimates suggest that it will somewhere cool down to 101 times. Titan, on the other hand, though Titan is also involved in a lot of other businesses other than jewelry, but almost 75 to 80% of Titan's business comes from Tanishq, which is why we've taken it as a competitor. And Titan's current P stands at 86 times versus that of 83 times as per Bloomberg estimates of 2025. And lastly, the recently listed player, that is PN Gadgil, has current valuation of around 33 times, and it will go to 44 times. So PN Gadgil will see an uptick in terms of valuations going forward, so it will become expensive. But Senco Gold, on the other hand, will see a downtick in terms of valuation, so it will come down to 37 times in terms of PE versus that of 49 times. Agam.
Okay, so that's your view as far as its performance is concerned, what the street is making of, and let's put all these parameters together and give it an overall rating for all the factors that we've spoken about. So when it comes to the income statement, strong balance sheet check, we're giving it a thumbs up. Return ratios, not so much, so it's a thumbs down, but neutral rating to cash flows as well. In terms of other factors, again, when it comes to shareholding, very well held, so it's a thumbs up. Street credentials, well, certainly neutral here. Street coverage as well, a thumbs up along with the valuation picture. So overall, if you take the total score here, that will come to roughly 6 out of 8. So it's not a bad score at all as far as Senco Gold is concerned, given the current world circumstances. With that, let's also very quickly touch upon the strengths and weaknesses, opportunities and threats for the company too. So I'm going to talk about the strengths, and of course the studded mix has remained intact, where despite the slowdown in demand and competition, it's the only listed player that is forayed into a lab-grown diamonds, notwithstanding Trent, which is actually not a jewelry peer. But Trent has also ventured into it very recently. But it maintains a hedging policy of around 80 to 85% on gold inventory. That's the other strength here. In terms of weakness, again, gold metal loans coming in at around 62% of the total borrowing. That could be something of a concern here. And strong presence in the Eastern markets only, which means that it could do well with a little bit of diversification. And well, the value growth is more than the volumes growth, but that's something with, to a certain extent, also keeps changing in terms of the environment. Mahima, what about the opportunities and threats here?
Right, Agam, so in terms of the opportunities, the jewelry market is, set to expand going forward. Every year we're seeing that the weddings are, the number of weddings that are taking place are outpacing the ones that took place last year. So we're seeing that the market of jewelry is going to have a robust expansion, and this will be at a rate of 15 to 16%. And Senco Gold can easily tap onto these opportunities. And the organized jewelry segment is now seeing a growth as compared to unorganized. There was a time when the unorganized space was much higher than that of organized space, but now we are seeing that the ratio between organized versus unorganized is that of 40 and 60.
Right.
So I think people are more, skewed towards buying jewelry, gold, diamond jewelry from the listed players, the known players, rather than going to small shops and buying gold there, because of also, the kind of adulteration that is taking place. So these are the opportunities, but some of the threats, that could possibly weigh on the company could be, first of all, slowing down of urban demand. We've seen that big players like Titan have already seen that volume growth has not taken place for them in the first half of FY25. Secondly, lab-grown diamonds is kind of hindering the demand for natural diamonds. So while Senco is foraying into the lab-grown diamond space, this might kind of impact their natural diamond sales as well. And lastly, the competitive pressure, though, is less, but it's still coming in from the organized player. It's still a 40% of the whole market, which could possibly, pose some threat on this particular counter.
Okay, so that's as far as its SWOT is concerned, but there are just a handful of more, parameters and elements that we want to include before we get the management in. So I'm going to talk about firstly the Senco Gold studded ratio for FY24 that stood around 11%, and for the first half of this FY25 that stands around 10%. So there hasn't been a big change, but it has come off to a certain extent. In terms of its average sale price, that particular ticket has moved up. In fact, it's the average sale price, has gone to around 49,000 as against 41,000 back in FY24. So that certainly is an improvement, in this period. And finally comes to the average ticket value. That again has seen a little bit of an improvement if you consider the FY24 numbers as against the first half. So the first half of FY25 stands at around little over 74,000 rupees, and for FY24 that same number stands at around 63,700. So improvement in these two parameters is something that we've seen as well. But let's also talk about its expansion in international markets as well as the outlook going forward, Mahima.
Absolutely. So the management has already guided that they want to expand internationally as well, and they plan to tap into the global markets as much as they can in the next 5 to 6 years.
Yeah.
Now, the traction in the current year, they've seen around 20% growth in their international markets already, and the same store sales growth stood at around 12% for them. Now, in terms of forward outlook, in FY24, they plan to open around 18 to 20 new stores, and 70 to 80% of the growth targeted will be from Eastern as well as Northern India, and they're targeting to improve their EBITDA margins towards that 8% mark, which currently is around at 7.2% mark, and they're focusing on increasing their studded ratio, that is the sales from the diamond jewelry. We've seen that FY24 had around 11% and H1 FY25 has had it around 10%.
Yeah.
But they're planning, they have strategies in place which will improve this studded mix, and they're expecting a top line growth of around 18 to 20% in FY25, and the management aims that the studded ratio will be around 12.5 to 13% going forward. So this is the overall forward outlook and the guidance that has been given by the management already.
Right. So, let's put this in a perspective even when it comes to valuations right now. And, as Mahima has mentioned that for FY25, Senco Gold has been, put in at around 37 times in terms of its price to earnings ratio. Now, if you consider the growth that the management is indicating, and by that I mean they're expecting the top line growth to be around 18 to 20%. I'm not going to try and extrapolate what it means for the bottom line, because a lot of that will depend on their operating margins. And their operating margins would also depend on the mix of the kind of jewelry that they've sold. Naturally, diamond-studded jewelry enjoys slightly higher margins as compared to purely gold jewelry. But if you just were to make that assumption of around 20%, at this point in time, at 37 times, Senco Gold does look like it's going at a significant discount to a lot of its peers. Now, that's not to say that a substantially larger peer like Titan isn't growing at that rate, but there is a little bit of maturity setting in as far as Titan is concerned. Kalyan Jewelers is the other one, and that's a curious one, because while growth, again, is something that we must consider in this case, but that's trading at 100 times FY25. And again, these are retailers, and it does lie somewhere between Titan and Senco in terms of size too. And of course, PN Gadgil is a newer entrant here. Surprisingly, looking forward as far as FY25 is concerned, well, that's standing around 44 times as well. So that's how valuations are stacked up. And perhaps these valuations will change also as well, because do remember that the ongoing quarter is the biggest quarter for this entire sector, being the marriage season. And of course, to a certain extent, January will also have some sort of an implication. The question really is, how can that pan out? So Mahima, on that note, thanking you for joining us and giving us that outlook, as well as giving us so much more insight with respect to the fundamentals of the company. But let's take this conversation forward with the management. Well, we have Shivankar Sen, MD and CEO of Senco Gold. Mr. Sen, well, good afternoon and thank you for taking the time out.
Yes, good afternoon.
Mr. Sen, we've actually spoken a lot about your company just right now, and it does seem like on a fundamental basis, you guys are on a very strong footing. I reckon that my first question will have to do with the fact that we're expecting about an 18 to 20% growth here on. Where do you think that this growth will come from, and what are the areas that you think that could contribute to this growth?
So what we are seeing right now, if you're analyzing the growth that we have done till now, if you ask me, the YTD growth as we speak today is around 16 to 17%, and out of that, about 12% of the growth comes from the same store sales growth, and about 4 to 5% of the growth comes from the new stores that we have opened over the last 1.5 years. So, you look at the festive season, October was a great month. We had 1,000 crore sale on a single month. If you look at Q2, we have seen that in Q2 also, because of the duty cut that happened, we had an amazing Q2, the best ever Q2, with almost a 29% growth in the smaller tier 2, 3 towns and cities. And these are the, where you see the opportunities of growth lying. And, the unorganized to organized story is something that everyone has been talking about for the last 5 years, 7 years. But actually, that growth is coming from the smaller towns. And as we expand also, we are very much aware that, we come from the eastern part of the country, and our focus for growth will be Eastern India and Northern India. East is where we already are strong. The brand is very much known. Leveraging the brand, the goodwill, the marketing expenditure it's just a very natural thought process. And North is the market which I think is open for everyone to come and explore. The possibility of diamond jewelry sales are higher in the northern part of the country because culturally they are much more, I would say, inclined to buy more diamond jewelry. So it helps with the margins also, with the stud ratio going up. So I think that geographically it is east and north. In terms of store wise, it is the same store sales great, which same store sales growth of 12 to 13%, and the new stores 5-6%. And diamond jewelry, if you really look at it category wise, it is gold jewelry which is driving the growth more this particular year, because customers are looking to buy more of gold with the gold prices going up. The growth in diamond jewelry has been comparatively lower. So, people are saying, okay, we'll wait for some more time. There was a lot of confusion with the lab grown diamonds, the prices of diamonds not going up as much as gold. So I think it's going to be more of a gold driven growth, but I'm sure next year diamond jewelry sales will pick up, prices will go up, because now the US, with the new president and the US economy looking up, the worldwide demand of diamonds will go up and the prices will go up. So this is how we would like to look at the overall picture.
Right. So, well, Mr. Sen, my next question is to do with your average sales price, which has moved up considerably over the first half of this financial year. The number I have is about 49,000 rupees, as against nearly 42,000 rupees at the end of FY24. Similarly, your average ticket value stands at around 74,300 at the end of the first half of this financial year, against 63,700 for FY24 by the end of that. So we are looking at significantly improved metrics here. But you're also saying that to a certain extent you are looking to convert the unorganized market, and that's what all the organized players are looking at. Do you think that there could be a little bit of moderation in the growth in both these parameters that we are talking about at the moment?
No, not at all. Because see, while we call the unorganized market unorganized, let me tell you that with GST coming in and all the various, hallmarking becoming mandatory, I wouldn't say that a large part of the market is unorganized. Everyone is getting more and more organized. Even the smaller jewelers are following the rules, and the compliance is much more. So it's not really unorganized to organized. Yes, how you call the organized is that where we are running through more stronger software systems, more professional team members. I think that's the way to look at it, where our team strength, our capital, the strength of raising money from the banks are getting much more stronger. But the smaller jewelers are also, trying to improve their, processes and systems. But this value, it is wrong to think that unorganized is catering to a very smaller segment of customers who does not have the disposable income. No, it's not the way to look at it. The gold prices have been going up. So people are, our gold exchange, which 4-5 years back was 22% of the sales, have gone up to almost 31% of the sales.
Yeah.
So even consumers are coming with their old gold, and it is need not be that it is old gold of Senco. It could be other jewelers' old gold also coming to us.
Sure.
So that is one part of the change that is happening. That why the jewelry sector against the other retail sectors have been doing well is because people need not have only the money to buy. The Indian consumers are sitting on huge quantities of gold, old gold as we call it, 24,000 tons and whatever the numbers are.
Yeah.
So that is a great potential for future growth for all the companies. That is number one.
Right.
Number two is that prices have gone up. People are having the faith and belief in gold as a commodity, so they are buying it. Number three is that jewelry segment is driven by wedding jewelry sales. So if you ask me, I would say that in the last 7-8 months, wedding jewelry sales have been a major driver for the growth for everyone, which means higher ticket size items. So footfalls could have gone down because prices of gold has gone up, but the ticket sizes have gone up because people are buying wedding jewelry. So that's the reason why we have seen these numbers.
Right. Mr. Sen, a final question. Actually, there's two parts to it. Firstly, your plans in the international market. And secondly, I know it's early days for lab-grown diamonds in India, but we're looking at a well, I would say a fairly healthy, well, festive period and wedding season right now. What kind of traction are you witnessing here?
So the international market will have a very calibrated approach. We've opened our first store and office in Dubai, and that is with the thought and the vision that it will act as a platform to expand into your US and Europe and other parts of the world through our franchisees, partnerships, looking for collaborations. But that will happen over a period of 3 to 4 years. I'm not seeing that something drastic happening in the coming 1 year or so. We'll also keep learning, looking, but we can also see that our fellow jewelers, a lot of brands are opening and expanding rapidly in the international market. So we'll observe what they are doing, and we'll also accordingly follow over the coming 2 to 3 years. That is with international market. And as far as lab-grown diamond jewelry is concerned, we've opened 4 or 5 stores of lab-grown diamond jewelry. We intend to open 3 to 4 stores more, and we are looking and closely observing what the consumers are kind of wanting. The ticket sizes there is 30, 40, 50,000 rupees. So it's very much like the ticket size that we deal with. And we are having a separate identity. We've created a separate subsidiary company which is focusing on lab-grown diamond and
Yep.
other accessories like leather and perfume. So we are creating a lifestyle kind of a branding, and that's how we
Sure.
want to take it
Sure.
forward as a design house. So
All right.
that's the plan with lab-grown diamonds.
All right. Well, Mr. Sen, we leave it at that. Thank you so much for joining us and giving us so much more clarity with respect to the kind of strategy that you guys are going to implement going forward and the kind of expectations that we can, in fact, have from the company looking in. But on that note, we are completely out of time on this edition of KYC. Don't go anywhere. Lots more lined up. Stay tuned, and we will be right back.